Morning, Mutwale. How are you doing today?
Good morning, Vernon, and good morning to everybody. Tis a day of love, brother. Tis a day of love. Stress for some guys, but love is what it's meant to be. It's everybody was singing Valentine is coming. Now to the guys who are in relationships, it's Valentine has come. Where's your gift? If not, you'll be sitting at home lonely. God, a happy birthday, I say happy birthday, happy Valentine's Day to people.
If not, you'll be
Yeah,
sitting.
yeah. Hey, look, you all made the choices that you did, but there's nothing wrong with it. Go ahead, people. Now, Vernon, just to get started in today's date, let's go into some of the touchings of the markets themselves before everyone gets so serious in today. I'm sure there's a lot of dinners, there's a lot of events, there's a lot of things happening today. I mean, the economy actually is recovering, people, so we might have to actually have that flexed out. But now, actually having to opening the markets, we are seeing that the kwacha did lose value, but lost a little bit less. It was down 0.8%. You did see the dollar rise. This is the 91st day of the kwacha losing value, and yesterday was the day that we saw the triggering of the statutory reserve ratio raising.
What's
So
with
I think everybody
the
should pay attention to that
and
and the
in your
impact
hair?
that
I
it
must have
had. Um,
you have
Sorry, I think we
some.
have a little bit of background noise here, and the impact that it was having
Oh,
on the markets altogether. So the other part that we would have been hoping that the statutory reserve ratio would have resulted in a much better in a quarter that be gaining value, but maybe we are starting to see a little bit of momentum switching. That's one of the things that we did see yesterday. We did see a little bit of momentum switching because we saw the MACD for the first time go into a hold pattern, though we're still seeing buy signals on the short term and buy signals on the gold or death cross indicators. Now, what else we're also seeing is that the rand was also down 0.2%. So we're seeing the rand getting weaker. That's good for us in terms of our imports from South Africa, those that are going to be priced towards us in rand. So it is good that we are seeing that losing a little bit of value, and that's less inflation risk or inflation pressure that we're picking up. The other part of the equation that we were looking at yesterday was also the bond market. Bonds were up 0.15%. Remember that we are prepping for an auction in about 2 days. That's where bids are closing. We see that the bond index is up 3.8% in terms of secondary market bonds. And we are seeing that generally bonds, even in dollars, were up yesterday because the movement upwards in bonds overpowered the movement downwards in kwacha. So we actually managed to see bonds up, but even against the week, this is the second consecutive day that in US dollars bonds are up. So in USD, we're seeing the bond index doing well for the Zambian offshore investor or the Zambian abroad who's buying government bonds to invest in. Interest rates are sitting at 23.56%, down again. So in other words, we're still seeing interest rates slightly sliding down, meaning that we're actually seeing a little bit of a bond buying happening on the secondary market. So there's some sort of positive rails. I think a lot of the sellers have managed to exit the market, and now we're trying to deal with what I call the new buyers. There are new buyers who are coming into the market who are trying to acquire people who are trying to set up their retirements. It's a new thing now, Van, and people have actually caught on to the idea that you can actually buy secondary bonds as well if you are getting into your retirement. And one of the things I'm seeing, even from my perspective, is that as government is paying out pensions, some of those pensioners are actually being responsible and actually buying instruments like government bonds so that they can actually now have their pension run perpetually and see if they can actually continue it. And they're building their wealth portfolios with it. So it's actually a good thing happening for the majority of. It's actually a good thing that's happening in general. So I'm actually quite. It's actually quite astounding. Now, going into even the commodity market, the commodity space yesterday, we did see that most of the commodities went down in price. We saw gold shrivel down a little bit. In terms of against the USD, it was down 0.43%. Copper was down 0.1, while oil went up 1.19%. Now, main drivers that we're seeing is everyone is kind of waiting for the inflation read from the US. That's the big news yesterday. Everyone is kind of waiting for the inflation read that's coming out from America. They're expecting that to be down as low as 5%. That's going to be the big read. I think everyone's going to be expecting. Will the U.S. inflation come back down to 5%? Remember, it was as high as 8%, 9%. So now they're looking at whether U.S. inflation will finally start to come down and settle down in about the 5% range. But we are seeing that if we're looking at the inflation, or what I call the wealth protection assets, gold in Kwacha yesterday was down 0.35%. Because of gold down and the Kwacha weaker. And we also saw that Ether, Ether, if you're an Ethereum holder, up 0.2%. It was up, 0.02%. But remember, year to date, it's only up 35.9%, but still on the week, it's down 8.95. Both Bitcoin and Ethereum have taken a beating in Kwacha this week. You've seen that Bitcoin is up 0.05%. It's also down on the week 5.68%. So we are seeing that wealth protection assets are also starting to slide a little bit. Gold, Ether, and Bitcoin all took a slashing, and the dollar only moved slightly. So if you're looking at your wealth protection portfolio, that didn't do too well. Now, looking at pump price projections, remember we're halfway through the month. What are we looking at? We're projecting that we might see a 73 rise in pump prices by the end of the month, mainly driven by the fact that the Kwacha has lost a bit of steam, while the USD the Kwacha has lost about 3.72%, while the Brent price has gone down only 0.49%. So we're not seeing any movements towards the negative. We're probably going to see movements upwards in terms of the prices of oil at the pump by the end of this month. Expected up by about 0.7 by 71 ngwe, which is the equivalent of 2.61%. That should probably add some more inflationary pressure, especially before the harvest kicks in. Now, in terms of the economic calendar, here's what we have from yesterday. Yesterday, we picked up on two important pieces of data. We saw the Swiss inflation data came in yesterday, 3.3%. That's important because Switzerland is usually a non-inflation nation. So you actually are seeing a little bit of strong inflation coming into Switzerland. It was up 0.6% month on month and 3.3% year on year. The other pieces of inflation that we were seeing yesterday was India. Now, India is quite important because we also have import from India. It's our third biggest import source, so 6.52%, rather stronger than expected inflation. So for Zambians, watch out for what you're importing from India. Remember, a lot of your manufactured goods, the chemicals, whether it's cleaning solvents, all those things actually come through Indian supplies. So those can actually end up increasing in cost, especially if the Indian rupee also gets stronger. Now, the other thing we also saw yesterday, we saw interest rates from the 3-year and the 6-month treasury auctions in the USA also pick up 4.68% higher than the 5.9 and respectively 4.84% higher than this 4.7. So short-term interest rates are still higher than expected in America, and we're seeing a stronger deepening when it comes to the interest differentials. And the biggest news from yesterday was the Japanese economy grew very slowly. As they are appointing a new central bank governor, I know that there was a conversation about gender equity when it comes to the Japanese central bank board. But let's be honest, Pacific Asian countries still have a long way to go if we're going to start talking about gender equity. But we did see most of the Pacific Asians. We have seen South Korea do a 1-2 step on that. But what we are seeing on the major parts of the market is that we did see yesterday the Japanese economy grew very slowly. Private consumption grew only at 0.5% quarter on quarter, but capital expenditure was the worst one, negative 0.5%, meaning it was down. So capital expenditure, it appears Japanese are not investing in expansion. That's where the problems are starting to come about, and it's slowing down their economy. Though they might be an affluent country, they're struggling with growth. What we're looking for today in terms of some of the major stories, some of the major pieces of data today, we're expecting British earnings to come out, while we are also expecting employment data from Britain, with also inflation data from Germany and PPI data coming out of Switzerland, employment data coming out of Europe. That's going to also affect what interest rate movements we should be expecting, with GDP data coming from Europe. Rwanda is going to make its interest rate decision today, while we are mainly expecting US CPI data with the expectation of 5.9% versus the 5.72% from last year. We are expecting that US inflation is probably going to hover somewhere around 5 to 5.5. Core CPI is expected to come down from 5.7 to 5.5. Obviously, there's been a little bit of a spike in oil prices that have led to some of this. And that's going to be the bigger part of the story. Obviously, Korean import and export data and trade data is coming out. But the main story that everyone will be paying attention to. Now, big stories from yesterday. If we started looking locally, one of the things we found yesterday was one piece of news is Copperbelt Energy Corporation projects that there'll be higher demand coming out of, after the Indaba, they actually announced that they're projecting higher demand coming out of DRC. So exports of electricity to DRC, just as we've sorted out load shedding right in the nick of time. While simultaneously, they are also expecting, and it's also obviously turned around, that they are also expecting that's an expectation of higher revenue and higher dollar revenue for them at a time when our currency is a little bit fragile. So for me, that's a good, strong take on CEC. And this has been one of the main things I've been seeing. CEC is basically driven by obviously the EV rise and the need for copper for EV battery metals mining, and that energy supply that is needed there is basically the key driver that is taking them towards there. So this is obviously improving the base case for Copperbelt Energy Corporation in terms of their buy case as an investment. So you want to pay close attention to that. The other part that we saw yesterday was that the Minister of Finance was embroiled in a little bit of a mess yesterday. We did see that Financial Times had published a story stating that Zambia rejects the proposal by China to ask the World Bank to also offer debt relief. And the Minister of Finance quickly jumped on and said, whoa. I said nothing of the sort. I'm just saying that's not an important issue. So that's been the mess that was cleaned up. Financial Times also did clear it up. The Minister of Finance actually even put out the actual questions and statement to try and clear that up. Now, this shows, once again, the importance of what I call the Chimerica rift. I keep telling you that the China-America rift is so pronounced that it's making debt very sensitive. So even just the mere thought of the minister taking a side was actually something that could have jeopardized debt talks and dragged them even further. So the minister had to quickly come out and clear that up, because that is how geopolitical embroiled our debt actually is. So if you wanted to see a real example of what I call the geopolitical tension of our debt, that story was an actual real example where our country is trying to play as much neutrality between the two, which is advisable, to continue playing as much neutrality as possible, that it shouldn't even be perceived that we're picking a side or we're leaning to one side. It shouldn't even be perceived. The Chinese should not feel like we're leaning to the US. The US should not feel like we're leaning to the Chinese, so that they can work this out. Because on the other side of this, we have an opportunity to actually play these guys well, specifically for trade. China wants to double its trade with Africa in the next decade, while you are simultaneously also looking at the US that really wants to now start investing over US and Europe want to invest $230 billion into Africa for infrastructure development, and they're trying to compete with China for EV batteries. Now, it's actually quite important how strong the EV race. I think us Zambians are underplaying the importance of the electric vehicle race. And let me show you two stories out there today that actually state this. BYD, the biggest EV producer in the world, the one that overtook Tesla. BYD is now investing $1.2 billion in an EV plant with 40 gigawatt capacity to produce electronic vehicle batteries. Okay, because they want to make sure that they can be competitive. Now, remember, these are the countries that are in Zambia, DRC, looking. So BYD is a Chinese EV producer, and it's really trying to produce. It's really trying to compete with Tesla's. It's trying to compete with Tesla's Model 3 and highest selling cars. So here's the thing: BYD significantly increased its BEV sales in 2022, reaching 913,000 units. That's how big BYD is, and more. And in full scale, they produced 1.8 million EV cars, plug-in electric cars in 2022. Now that's dwarfing Tesla's 2022 sales, who also only grew somewhere around. They grew 40%, but Tesla reported 1.2 million Model Ys and Model 3 globally around the world. So already it tells you that they've been dwarfed by BYD, who does have a cheaper car. I think everyone has to recognize it. Who does have a cheaper car, but because Tesla does obviously sell like more expensive cars. But you can see it's no longer Tesla just at the front anymore. Tesla is the leading American producer. BYD is the leading Chinese producer. And you can see there's a battle royale happening for EV cars. The expectation, especially last year's data, that EVs, electric vehicle cars, made up electric vehicle cars made up almost about 10%. Electric vehicle cars made up about 7 to 10% of total vehicle sales, total new vehicle sales in 2022. Now, that's a huge jump from a car that didn't exist in the last couple of decades. It didn't exist in general. So what we are trying to now understand is that probably by the end of the decade or the middle of the next decade, we should see EV cars overtaking. So that is how important the EV race is. So if we can get past this entanglement of the debt, lovely use of, I think, lovely thought of the word entanglement on Valentine's. But if we can get past the word disentanglement of debt somewhere during this period, we can actually play these guys in terms of investment and trade. The reason I'm saying this is America is even putting aside offers to say, we want to help you not just sell us the minerals, we want to help you produce the EV batteries, and then you can sell them to us. Okay? So that's what you're starting to get, because their fear is that China is going to hollow out all the resources and then take them for themselves. Okay? And then they're not going to be able to get any EV mineral. And that is what we need to be able to play against them. So the Chimerica rift in the short term is a risk. In the long term, it's an opportunity, as long as we maintain neutrality. So that's the key thing I wanted us to really look at. Other piece of news yesterday, obviously, as I said, we are looking for US. Now, one other thing, just to show you how important EVs are, the second story yesterday was in the Super Bowl. We saw for the first time electric vehicle adverts were 3 times more than internal combustion engine adverts. So in other words, the advertising expenditure on the Super Bowl yesterday, Super Bowl Sunday or Monday for us here, the Super Bowl actually saw electric vehicles advertising more in the Super Bowl than we saw internal combustion engine brands. So that's a signal that you can see a lot more growth. Remember that the EV space, electric vehicles grew about 40. Electric vehicle output grew about 40% in 2022 versus internal combustion engines. Vernon, and this is a shocking one, which contracted about 8%. Sorry, that number wasn't correct. That was Tesla's sales. So far in 2022, EV sales are up 70% compared to the figures of 2021. That is how strong the electric vehicle revolution is. This is according to Morgan Stanley studies on EV sales. EV sales growth globally, so that was in the US. EV sales growth has been actually moving above 40%. So I think the key factor we're looking at here is that they're advertising more, they're pushing out more units, they're selling more. And what does that mean for Zambia? That's copper sales. That's we should be looking at manganese, because remember, manganese is an important part of the Gemini battery, which is being tested in Tesla vehicles, which is one of the lead brands. And also, BMW has said they want to use the Gemini battery too, because it runs longer, it uses less cobalt, it uses far less other material, it uses less lithium, and it uses more manganese. So we need to make sure that our manganese is being mined correctly. We need to make sure that our copper stocks are good, our cobalt stocks are good, so that we can sell to the various types of EVs out there in the industry. So that's just some things that were coming out yesterday. But main outlook before we get into a little story, our little analysis from today, and our other part of today, which is going to be our wealth tracker. Remember, we're going into the journey of the levels of wealth. The other part we just want to look at, I just wanted to point out, is inflation is still looking downwards, except for some hotspots like Switzerland is a surprise inflation. Industry growth. EV sector is really speaking to industrial growth, but global growth is slowing down, with Japan being one of the major economies showing a few signals of weakness. Now, we are seeing a lot of tech companies still laying off in America, but the labor market is still extremely strong. So we're really going to look for a lot of the inflation data coming out of America, but we still have a situation where short-term interest rates are higher than long-term interest rates in the USA. And that, Vernon, is our stories for today. We are now going to jump into our conversation on levels of wealth. We started this last week and we ran through it. Today, I just want to go much slower into the wealth levels conversation, so that we can kind of walk into wealth levels, another understanding of wealth levels again. But I don't know, Vernon, what sticks out for you today, besides the fact that you might be pensive about who you need to buy a gift for? Or are you one of those guys? Did you sort out your Valentine's gifts early, Vernon? Did you sort them out early? Or are you one of those who's looking for them now?
No. I actually had worked around the whole Valentine's issue last week, and at some location, made arrangements and reservations and things like that. So I'm ready. I'm stress free.
Shabba ranks. Shabba ranks. Mr. Loverman, I can see you got it. You got it under control. No, you'll see. If you step out on the road, you're gonna see a bunch of guys sweating bullets today, trying to figure out what is actually happening, whether they'll be able to make it. You'll actually see a bunch of guys trying to figure themselves out today. No, that's usually the stress. I always catch guys, and I used to work on Cairo Road, so I would see guys like on the road itself trying to figure out, okay, what's going to be happening today? Am I going to make it? Am I going to find something? Then they find all those people who are selling those Valentine's hampers have doubled their price.
Yes.
While the other guys managed to get things at a nice, cheap rate. So all the best to everyone. All right, Vernon. So going into today's conversation, to everyone, all the best, guys. As I like to say, Valentine's, happy Valentine's to the women. May God be with you to the men.
Right.
Right. So let's get down to what we're talking about in terms of wealth levels. I really have been trying to get through this conversation about the levels of wealth, or as we say, the AMA levels of wealth, so that people know how to kind of build themselves. So I'm going to do a recap. But today I'm also going to include another conversation about. I'm going to include another conversation about higher education expenditure, how to save for higher education. Then we're going to go into wealth levels at age 30. Okay, what a person who's 20 going into 30 should be looking at in terms of their levels of wealth and what they should be planning on, what behavior they should be looking at. And while at the same time, we'll also be talking about what a person who's 30 should be expecting themselves to be. Where should they be before we move into the 40s? And then obviously we'll be going into the 50s at the end. But wealth levels are extremely important. So these are what I call my wealth targets. So I just want to do a quick recap. Now, the reason I start by telling everyone this is your historic average data. This is the historic average data of salaries, because the first thing you need to be able to do to build wealth is generate income. Okay?
Yeah.
The first thing you need to be able to do, you can't save money you've never made. So the best thing you can do is to generate an income. Your number one wealth building tool is your income. Okay, so as you can see, and I think this should have been revised upwards. We did get the revised numbers, Vernon. Last year, we saw a 9.8% increase in salaries to 6,700. So we just need to upgrade this. Sorry about that to everyone. But it's 6,700 kwacha. 6,770 kwacha is the average salary in Zambia, according to NAPSA statistics. This is NAPSA's annual average earnings. Okay, this is an annual publication that they give you where they tell you what the average salary is around the country based on the 950,000 NAPSA returns that they get. I don't think anybody else out there has a bigger sample size. And if you do, please publish it. So 6,770 kwacha, which is a 9.8% increase. Remember that inflation was 9.9%. So really, in reality, people, real salaries did not change. So I'm going to now give you something here called real salaries. So now we did the real salaries read. So if you look at this, Vernon, this is what we call inflation adjusted earnings. So we've looked at it in terms of the year 2000. Okay, so what is the purchasing power? According to somebody who was in the year 2000, who used to get a salary, the average salary being 300 kwacha, what was the purchasing power of their money? Now, what we saw from about 2001 all the way, especially about 2003, all the way up to 2013, you can see real salaries. People, these are real salaries, not nominal. Nominal are these ones here. These are the actual salaries you see on your payslip. This is the purchasing power of your salary, how much it can buy versus a person in 2000. Okay, so what you can see is it started to come down 2001 to 2003, but it went up all the way up to 2013. So this was the purchasing power. Now remember what I said, 2003 to 2013 was the greatest economic expansion in Zambian history. We saw the economy go up sevenfold. We saw credit markets expand 169% versus only 83% of government bonds. We saw the government contain itself and run surpluses. So we had a lean government, a big business boom. Unfortunately, we had a lot of wealth inequality and income inequality, which is what led to the populism that came in later. But this was the side of it nobody wants to talk about. We did from 2003 to 2013 experience the greatest expansion in purchasing power in Zambian history. Okay, unfortunately, from 2003 is where we now switched to socialism and populism, where we decided government expansion was more important than private sector expansion because we wanted to try and spend as much money as possible. We killed our reserves, we slowed our economy, we stunted our minds, and as a result, purchasing power of the average Zambian went from 784 kwacha, almost in half, down to 486 kwacha. So you can see that we have been steadily declining in terms of the purchasing power of the Zambians, instead of the rising that we went through from 279 to 668, which was more than a doubling. So the average salary that somebody was earning was actually earning them more, was able to afford them double what it could have a decade before that. Almost triple, in fact, if you think about it, it's almost tripled what it could have. Now it got to the point where the average salary versus 2013 was buying half. And we knew this. We all experienced it. We walked into grocery stores and we were seeing that our trolleys were getting thinner and thinner and thinner and thinner. And that was the reality of the last couple of years. So last year we saw for the first time, we saw it manage to stunt. For the first time, I think since 2018, we managed to see the purchasing power hold still. And hopefully, I think that's what everyone is kind of hoping for, that purchasing power. This is the most important statistic. This is what reading inflation data means. This is what unemployment data stands for. Vernon, the most important thing to you is being able to have money that can get you more, so that you are able to have a lot more left over so that you can invest more. That is the purpose. Okay, you can build more wealth if your money has more purchasing power. In other words, if your salary grows at the pace or faster than inflation, that is the key. It's not about what level inflation is. Inflation can be 6%, but if salaries are not growing, you're still going to get hurt. Okay, inflation between 2014, only 2015 was really bad, but inflation from 2016, 17, 18 was single digit, but salaries were not growing. That's the problem. Salaries were moving 0.8%. They were moving 8%. 6%. So because salaries were moving so slow, purchasing power was slowing down. So the purpose of us targeting 6 to 8% inflation is because we expect salaries to at least grow 8 to 10%, so that the average Zambian can experience a 4% increase in purchasing power. And if you are disciplined enough, that means that when your purchasing power goes up, you don't raise your lifestyle, you take that excess, save it, and invest it. That's the game that we're trying to play for here. So this is the statistic everyone has to focus on. Purchasing power. This is what you want your politicians to work on. Okay, because you know what I get, Vernon? I often get the feeling that most Zambians don't know what to ask from their politicians. They just kind of say, this is wrong, that's wrong, feels wrong, this wrong. And then the chorus are being led by alternative politicians who are just saying, yes, wrong, this wrong. Zambians are talking about the statutory reserve ratio. It's wrong. Bring it back down. They don't even know what it does, what it's supposed to do, what it was intended for. All they know is that the opposition will tell you to believe something. Even when these guys were in opposition, they did the same thing. Okay, they would tell you to believe something, but nobody's looking at the data. So here it is, people. This is the number you want fixed. Vernon, you want that when you go into the shop, your salary can get you more. Okay, but you don't want to get that more because you want to then keep your lifestyle and say, now I can start saving for Vernon of the future. So that's what we want to start doing. You need to grow your income faster than inflation, but it works best when inflation is held down. And that's what the 2003 to 2014 or 2013 cycle was about. Incomes grew much faster than inflation, which was sitting in single digit, especially from 2005, 2006 onwards. So that's the statistical point I wanted to point out. Now, this, Vernon, is a simple trajectory which I actually wanted to give to as many people. Why it was important for inflation to slow down. At the pace that salaries were growing over the last since 2013, and at the pace inflation was growing since 2013, you can actually see that purchasing power of the average Zambian was going to be down to 257 kwacha, a third of what it was. You are going to be walking out of grocery stores with a third, okay, of what you were able to purchase in 2013 because inflation was outpacing. This is why it was important to arrest inflation. So when people start saying, okay, and I know that, yes, fuel prices are not great. We can do much better with inflation. But when people start saying we need more money in circulation, we need money in circulation being pumped out through the government is exactly what ripped through your purchasing power of your salary. And if you look at this projection that was being done, you are going to go down and steadily lose your purchasing power. This is what was going to happen to you. So as many people need to calm down and think very carefully about our usual statements that we like saying. But this is just a projection that we managed to pull out so that we could see where things were going. So this is why monitoring inflation, even for your income, is extremely important as a person. Now let's talk into the wealth levels conversation, or the wealth AMA levels conversation. So people, here are your 5 wealth levels. Remember that we worked on them and we republished them. Remember, I had the 8 levels of wealth, but we've kind of refined them down to the 5 levels of wealth. So take notes. If anyone can give me that. If you're here watching on Facebook, give us that note-taking emoji. That'll tell us that you're actually taking notes. Vernon, I'd also like to see you. I mean, you're a young man. You also need to start taking notes. Now, looking at the first level of wealth. Now, there are 3 levels of poverty before this, and the levels of poverty are insolvency. The other one is just being current on your bills, living hand to mouth or check to check. That is a level of poverty, people. That's not wealth. Check to check, yes, it's a privilege in Zambia to be able to live check to check, but it is a level of poverty. So you have to kind of watch out for that. And then just being able to cover, being able to protect yourself. Now, financial stability is your first level of wealth. Your target is somewhere around 100,000 kwacha. And financial stability means having an established base. Okay. In other words, you are able now to build wealth because you are not easily shaken. This means 1, you are running a budgetary surplus. 2, you are debt free. And 3, you have 6 months worth of expense reserves. So if you look at your expenses, especially your 4 walls, your housing, transportation, clothing, and food, if you look at all those costs, do your savings equal 6 months of those? Because then you'll be able to deal with as many emergencies as possible. Plus, do you have some wealth that you've built up? This is a person, Vernon, who is financially stable. This is the first goal you want to try and reach as a person. Okay, your first goal is to try and get to this 100,000 with 6 months in cash reserve, a budgetary surplus, and being debt free, at least only having long-term 5% debt if you work for a bank, for example, and you get 5% interest, or you work for government and you get a low interest rate, though they're now getting those public sector fund loans, which are they're ruthless for them. But those are the things that you want to see could be possible for you. At this point, if you're a student, you want to have gotten rid of your student debt because that thing is probably killing you as well. I saw the story yesterday about meal allowances. I don't want to be the person who throws cold water on it. But just to the students out there, remember, it's a loan. Not when you come to us and start saying, but no one, it's a loan, people, okay? It's not free money from the sky. Yes, you need it. And we actually endorse the fact that you need it. But remember, you will pay it back because somebody else will need it. I repeat, because people in this country have got this tendency of not listening when things are being borrowed. Okay, 2012, we were busy dancing when we were getting Eurobonds. Today, we're calling the world brutal capitalists when we have to pay for these Eurobonds. What did you think was going to happen? They were just going to turn around and say, no, you don't have to pay us back. You are going to. And now there's automatic collection. They catch you where you earn your money and they start deducting automatically from your workplace and demanding your workplace automatically. People are looking at their pay slips and whoop, Vernon, money is gone. Okay, that's what they're seeing. They're catching their pay slips with half their money gone, and that is the reality. So please remember, meal allowances, book allowances, project allowances, accommodation, and tuition 5 things, they are all a loan you will pay back. Okay, just wanted to put that out there for everyone. So for you to reach financial stability, you really want to get your student loan out of the way. So that's why as early as you can, you got to find some way to earn money to take that thing out. And you really have to assess how much of a student loan you want to have. Now, the second level of wealth, which I've told to everyone, is financial strategy. Okay, this is where your money is in wealth building formation. You have your money in wealth building formation. You kind of attain somewhere between 500,000 kwacha worth of financial assets. You can survive 5 years without income. You are deploying capital. Now, this is what you're doing. You're no longer defending your needs. You are now deploying capital. When you're stable, you were defending your needs. Now you're deploying capital for growth and for economic and for wealth development. So this is where you're doing wealth development. That's financial strategy. The third level of wealth is called financial security. You can survive without an income. I stress the word survive, people, not thrive, not living my best life Instagram. Survive. Okay, surviving without an income means eating food so that you don't starve, not gourmet meals at your favorite restaurant, eating regular food so that you don't starve. This means having a roof over your head with lights you can switch on and water that can run through it and a bed you can sleep on. This means being able to replace the clothing that you have so that you don't go walking around with holes through your clothing, and being able to run to transport yourself and move around in a basic vehicle, not a Benz. No, just being able to move around in a Corolla or a bus. Okay, that is the point that you should be looking at. Somewhere around 1.25 million, you can perpetually survive without an income. Survive, people. I'm going to remind you of that word. The fourth level is financial self-reliance. So in other words, you don't depend on work for what you want. Your assets can get you what you want. The passive income from your assets is 3 times your basic needs. Okay, 3 times your basic needs. So you are able to protect your needs and acquire your needs, and then you've got money left over. So in other words, if you've got a stock of bonds and property, the rental income and coupon income are enough to take care of your basic needs and your life. They're able to take care of these things. So you from the coupons that you're getting from your bonds and from the rental income that you're getting from your property, for example, that combined, you are now able, Vernon, to buy food, put for gas in your car, put clothes on your back, have your house taken care of if your pipe bursts or anything, and now you've got money left over to go to a restaurant. You've got money left over to have a little bit of fun. You can't live la vida all the way, but you've got enough money to enjoy. That's about 3 million kwacha. This is financial self-reliance. Then financial self-determination means you are free to pursue your dreams. The passive income from that I mentioned is 5 times your basic needs. Now, not your AMA levels, not your taste. Listen to me very carefully, people. Differentiate between your taste and your needs. Okay? Your taste is the brand of juice that you want. Your need is you need something to drink, otherwise you go thirsty. Okay? Your taste is I've got to go to this place for supper. Your to eat. Your need is food, okay, in its cheapest form. So your need is the physical, tangible thing that you're consuming. It is not the brand, okay? Your brand specificity is not accommodated in here. If you want to be brand specific, that's your own choice in life, okay? But the point I'm trying to tell you is the passive income should be 5 times more than your basic needs. And we peg this at somebody who has built a wealth portfolio of 5 million kwacha or has passive income streams of 50,000 kwacha or more. That is your levels of wealth, okay? So my advice to everybody, and I've been saying this from the beginning, look at where you are in terms of your levels of wealth and give yourself 5 years to get to that next level. However, if you're not at level 1, you need to get there in about 12 months to 2 years at max. Okay? You need to rush there, especially if you got debt and you're in a budgetary deficit. You need to get out of budgetary deficit this month, and you need to get out of debt ASAP. Okay? And then you've got 6 months, the 6 months reserves, you can build that over 12 to 2 years. But then the rest of these, give yourself 5 years to get from one level to another, unless you've got the income. Now, above this is called financial abundance. That is where now there's a 6th level where it's more than money. That's where maybe if you're a person who earns more than 50,000 kwacha a month, by the way, you are in the top 0.5% of this country if you earn that much. You're in the top 0.5% of income earners if you earn more than 50,000 kwacha a month. If that's your case, then you're trying to maintain your dreams and your life, and you're trying to maintain the dream life that you've acquired. And this time you want to do it with your time free. The purpose, Vernon, of wealth is to free your time. And very quickly, Vernon, just to give people the numbers again, because I rushed through this last time, I wanted to make sure that I recapped it before I go into the main things. If you want to invest, like how much you is your recommended monthly investment for each of the target wealth by age 60. So if you want to get to financial security, financial self-reliance, or financial self-determination, these numbers in front of you are the amounts of money you need to invest on a monthly basis. Okay, these are the numbers you need to invest on a monthly basis, assuming you got zero in the bank, assuming you're starting from a zero balance of assets at these ages. So like 25-year-old has to invest 592 kwacha every single month to get to financial security, and 2,369 kwacha to get to financial freedom by age 60. Okay, so these are the numbers you have to look at. Now, if you're one of those people who says, Munyumba, I want to retire in 10 years or in 20 years, but I'm starting with zero. I'm 25, but I want to retire by 45. Okay, so this is what you do. You go to the 35-year-old's numbers. Okay, so you subtract 60 from the years you want to retire in, and you go to that person's numbers, and that's where you're starting off. Okay, so you may be 25, but you're starting with the numbers of a 35-year-old who needs to invest 5,760. Now, do you have the salary for that? By the way, the average salary is 6,700. So if you have the salary for that, that's also the question we need to ask, by the way. Now, if you're one of those people who maybe you do business and you've got lump sums of money that come in, these are, by the way, are the numbers in thousands of kwacha, okay, that you should have deposited or invested in financial assets, but in order to leave that money so that by age 60 you have your financial independence, so your financial security, self-reliance, or self-determination. This is what you have. So these are the numbers in front of you. Again, make sure that you run according to what these numbers are saying. So run according to the time you are giving yourself. So if you want to retire in 15 years, then you are a 45-year-old financially. You may be 30, but you're a 45-year-old financially, and we get to calculate it. We'll be talking tomorrow, Vernon. I know we've run a little bit out of time here because I really want to stress this point of the assets, but we'll be talking about this part here, which I've just got here, is how much you need to be saving and investing for your children's education. This is a little bit of a preview, and how much you need to have in the balance if you just want to have it deposited for your children's savings and education based on what level, diploma, degree, regional degree, and global degree. So that's just a little bit of an early glimpse into what we're going to be looking at tomorrow. Please assess your levels of wealth, figure out where to get started. And once again, I'd like to say happy Valentine's Day to the ladies and God be with you to the gentlemen. It's a tough one. I've been there before. Don't worry, guys. I've been in the struggle with you before. I've been there. I know what the war feels like. And I'm laughing because I remember that. I remember the battle days. It's rough, guys. All right,
Absolutely.
guys.
Always a pleasure. Thank you so much, Mtwale.
All right, everyone. Have a wonderful day.